Okay, everyone, I'm going to do a closing market wrap video. We'll get right into it. Give me a thumbs up. I'm trying to get over 500 for this video. I do appreciate that. I hope you guys are able to, make some money. That's really the goal here. All right, so we'll start out with the IWM. We got a lot of weakness in the IWM. We've talked about the break of this support level right here. And obviously we had a false breakdown. So, you got to keep an eye on those. Those are usually what end up getting, if you're trying to short, they usually try to shake the initial people off with some sort of a whipsaw signal. So that's what it looked like to me there. And then when we bounced all the way up here, we had that negative divergence right there. You can go back and look at my other video. I talk about it. Moving on though, we broke the support line right there. And it's been pretty much lights out ever since. So I think we're probably due for a bounce. I mean, pretty impulsive selling over the last few days. However, to me, it looks like the bounce that we'll get will probably be just a back test from below of that 215.50 area. You can see that was really the resistance here. We gapped up to it right there, and then it held support. A little bit of a dip. It's not a very strong level because it's been kind of pierced through a couple times, but I think that's the near-term level that we have right now. So likely if we're going to get a bounce, we're going to bounce right up to that 215, it's about 215.50 and get rejected there on our way to lower prices, which will likely be what I'm seeing as down at this like 202 area. It's this trend line right here. That trend line, if I look at the daily chart, comes off of the March 2020 lows, and we are just continuing to kind of, that's just been trending up. So heading down to that trend line, I think is where you're going to get you're going to get a reaction there most likely. You'll probably bounce up, that could be a 10% bounce. That doesn't mean that the top that we just saw in IWM is in, the top might be in, I don't know. But I think, you fall down, you get a 10% bounce or so. Maybe we're going to break and continue lower. I can't tell that now, but what I can tell for the short term, what it looks like the highest probability is we're heading down to that trend line. All right, so I'm trading this thing. I'm short this thing, pretty loaded up. And I've been short for a few days now, and it continues to work. All right. One of the reasons I was almost a little more interested in shorting this thing, I typically short the Qs, and that's usually the instrument of choice. However, the Qs has already had a good fall. If I go to the Qs here, the Qs, here's your sell signal right here, and we already dropped. Initially, we dropped from, from the highs, we fell 12%. But even from the sell signal, which was basically right here on February 22nd, we dropped about 8%, almost 9% actually. And then the small caps haven't sold off. They're just starting to sell off now. So I did short this Qs, and, so I'm shorting the IWM now. There's some rotation basically as everything. I'm looking for a broad-based sell-off. And so in order to see that broad-based sell-off, we need to see, the Qs maybe leads. Now we're seeing the IWM weaken. Maybe next up is the S&P 500. And that might be the end, kind of the end of the sell-off. As the S&P 500 kind of flushes out, then, the rest of these are going to sell off more. But the IWM selling off will start to signal that we're likely going to come to the end of this sell-off, at least for the short term. I'm not saying that, I still think that probably the top in the S&P 500 is in for quite a while. But, that doesn't mean that you're not going to get a rally, some sort of strong rally. Doesn't mean we're going to make a new high, though. Looking at the Qs, all right, big impulsive breakdown today. Where did we go? Well, if I go to the hourly here, you can see pretty much right there to support, or go up close to support. We've been kind of ping-ponging back and forth between this level of 324.50 and about 311. So we haven't broke that support yet. A break of that support, and that's going to signal probably some pretty quick selling. Once we break that level, we'll probably sell off pretty impulsively. And I'm still looking for that to head down to about 285 in the triple Qs. That's where I think we're going. We potentially could rally up 10% or maybe more. Maybe we'll bounce off of that and head all the way back up to here. That'd be a 9-10% rally. So I could see that, As of right now, we're just watching that 311 level. Okay, I don't see anything in the chart that tells me that the selling is finished. All I'm seeing is, kind of bouncing between this range, and I'm waiting for that breakdown. And I mean, in fact, I'm starting to see signs that other markets are starting to sell off too. So IWM's now selling off. Here's XLF, the financials. They were the strong, index, and they are selling off now too. So there's your sell signal right there. I was on vacation during this sell signal, so I couldn't put out a video saying that we have a sell signal in financials, but I'd been talking about this chart for weeks before that. So anybody that's been following me probably were able to spot that. So that's been selling off. That's down, basically 3% so far. And I think we've got, quite a bit more, all the way down to $30 area, I think is where this thing's heading. Flipping back to the IWM, just as, further kind of follow up to the analysis here. This is a weekly chart, and just to give you the bigger picture, here's your 2009 lows. You've been walking up this trend line for 10, 12 years, and here's how it held support all through here. Held support multiple times on this chart, all through there. Broke support, and then we did a full back test. All right, so that is the area where it should get rejected. And as I zoom in, you can see, boom, back test. So far, getting rejected. 2 selling weekly candles. This one's getting impulsive. This is a more impulsive sell-off. So could get even more impulsive. We'll see. I suspect we're going to close the week potentially down here, down at this trend line at 202 area. So look for that. The other thing is if you get a break of this trend line right here, then I think we're going down to the 200-day moving average. And if we do it relatively quickly, that looks like it comes in with some support right here. You can see we were former resistance right there at about 174. Resistance all through there. Didn't quite get there right there, but as you zoom in, you can see we gapped up and the week kind of closed right there at that 174 area. So it was a gap right to that level and then off to the races. So I think we come back in and potentially check that gap, maybe backfill that gap at 167. Just that area could be an area of support. The 200-day, if we continue to sell off, the 200-day is likely to start to turn down, and maybe we meet up with that 200-day down around that level. So that would be in the in a bear market scenario where this thing's going to start to impulsively sell off. That could potentially be your first leg down. All right, maybe from the high all the way down to there, a 25% drop or so, 26%, and then you get some sort of impulsive bounce, maybe to the back of this trend line. These are all things that could happen. Obviously, we got to just take it day by day, but things to watch for as we go along. Someone asked me to cover energy, so here's XLE. XLE, I did take a short the other day on DRIP. I closed it though. I'm longer term bullish on oil, but oil was really overdone, a lot like the financials. So XLE, let's go to the hourly chart here. You can see we had an uptrend line. It looks very similar to the financials. You got the sell signal right there. That on this day, basically, if you look at the daily, you're pretty muted sell signal, but this was your sell signal right there. When you get the close below that trend, that was the first daily close below the trend, and then it gapped down and has been selling off ever since. So there's your sell signal. We did have negative divergence show up on the PPO and the RSI on the daily, and so that was your indication. Now we are bouncing off of, see the top of that island cluster? If you go back and look back in June, this was an island cluster top reversal pattern. See, I have it circled there, and that signals a reversal in trend, and you did get that reversal in trend. It fell a bunch. Well, we're coming back down to that right there and hitting the top of that. So that should, and also you can see we also had a reaction back here too. See how we broke below and then traded up, and it held as resistance, and then off, down she went. So that should be support, and that is where we're bouncing off of as of right now. So I don't necessarily have a good read on, what's going to happen here. I would just watch the broader market. Oil, if the SPY starts to sell off, oil's going down with it. All right. I think that's likely that we're just bouncing off that support. We're going to break it and head a little bit lower. you know, probably head down to this level about 42 right here, which is the bottom of that gap. And that's most likely going to be the area of kind of longer term support that I can tell. So that's what I would think is 42. But yeah, you got the bounce. They stepped in a little early. You got the bounce off that first support. Look for it to head back down and potentially break. I don't have the strongest conviction on this one. You know, that might be the support and it might hold and off to new highs. So it's hard to say on that one. But if you look at the daily, there's no bullish divergence here on the daily where we were kind of making new lower lows. So what I would think is you're probably going to sell off more and start to build a bullish divergence as you run into this 42 area, maybe undercut it a little bit and start to put in bullish divergence down here and then hold and then off to the races. So I don't know. Yeah, let's look at the dollar. I noticed that today we're breaking above this 92, continuing the uptrend. So again, I have it circled right here. That's your bullish divergence. See the divergence, how we're moving up. And that was your divergent low, telling you a trend change was likely. And obviously there it is. So we're at that. It looks like we're at the 200-day moving average here in the dollar. We'll see what happens around that. The 200-day moving average for me is not a huge part of my trading style. It's really just, usually I see it as an area where things can get checked. You usually get a bounce around there, but it doesn't necessarily indicate that a trend change is happening or that it's going to be, the 200 doesn't always hold. Let's put it that way. If you're going to get a good trend change, you're going to break the 200-day many times. So the dollar is there at the 200. Yeah, we'll see what happens. But, we're breaking this level of 92, which was former support right there. Support we broke, and then it was resistance a little bit, and we're slightly above it. So keep an eye on that, and let's see if we have any indication of, okay. So we do have slight indication of negative divergence right there. However, it's not confirmed. All right, what you got here on the dollar is, see how we made a new higher high in price and yet we have slightly lower low in momentum? Now, that doesn't mean it's confirmed. If the dollar keeps going higher in price, then the momentum's likely going to keep going up and you're going to burn through the divergence and it's just going to continue to be an upward trend in momentum. So what you need to see is you need to see the momentum start to turn down. You need to see the PPO, or you can use a MACD. Look for that to start to cross and turn down, and look for the RSI to kind of start to turn down as well. That'll give you an indication of a negative divergence. That doesn't mean that price is instantly going to just drop. That just tells you that a trend change is likely. And so what that can mean is if you have negative divergence start to show up, you can continue to kind of grind higher, but that's divergent high action and it's likely going to reverse. So then you look for the reversal, right? If, I think the dollar has the potential to run all the way up here to 97. All right. And that's the trend line. If you look at the weekly, it goes all the way back to 2011. All right. See that? Use log scaling. If you're not using it, that'll help you, track these trends more accurately. All right. So there you got support. We broke. We could back test. We haven't really had a full back test. We never got there. We broke and never really back tested. So we could back test. That's all I'm saying. And that makes me a little suspect on gold. All right. Doesn't mean that gold has to sell off if the dollar's rising, but typically it's going to, especially if the dollar rises this much, I just don't know if gold's going to be able to hold up. And so you can see gold is continuing to downtrend, right? So now that I'm looking at it as the dollar's trying to break out and gold's continuing to downtrend, perhaps gold is going to continue to kind of diverge. And I've got a trend line on gold all the way back here from August 2018. And you can see we just, a couple tags there, tag there. And maybe we're going to fall all the way to that trend line down at 1600. All right. It's possible. It's because of the dollar is what I'm kind of looking at this. So what I'm starting to do is really pay attention to these minors with like WPM, right? This was one, you had a divergent low right here with bullish divergence. You did get a rally. We didn't get quite up to where I thought we were going to get up around 43. We're coming back down to that former support area. You can see, and it's sitting right there at about 37.14. So as long as we hold that, then I think this is good. If we start to break that and you get daily closes, consistent daily closes below that, then this potentially has another leg down. All right, so I'm going to be watching that closely, and I'll just pull the trade if I start to, if it starts to do that. Again, it's all about the entry and the exit. The entry rate was right here when we broke below that right there, but breaking below it, we made bullish. We had bullish divergence, and then once we recovered it, it was, that's a buy. All right, and then off to the races, but no real follow through. So we'll see if we hold and then we bounce. Okay, we're good. And if we break and we start to close below, then potentially another leg lower. So watch the dollar. That's going to be my tell. If the dollar starts to roll over, then, this isn't really going to go too much farther down. Besides that, a lot of these miners still look okay. So, as long as they look okay with the chart, you just stick with it, and that's really what I'm planning on doing. Someone asked if I'm a longer term holder of gold miners. I mean, I am when I get in at what looks like an objective long area. If you look at, I go back a couple of years, you'll see I was talking about Barrick Gold. I was buying Barrick Gold all the way down here at support, just kind of buying it through here. And then when we broke, we ran all the way up here, and I sold it right there at 28.40 basically. It was like 28.25. And I have not been in the miners for all of this time, and I was looking for it to come back down. But again, this is a longer term uptrend in Barrick Gold. Here's your lows in 2015, and you're making higher lows and higher highs, so you're trending up. So longer term, I'm a bull because you have a longer term uptrend. It doesn't mean that it can't correct more, but yes, I am longer term looking to buy at major support levels because I think we're in a longer term bull market, and until I see a change in the chart, then I'll remain that way. Zooming in on it, since I'm here on Barrick, you can see, look, we broke out above that downtrend right there, and we're just coming in for a back test, but we're still holding it, so it still looks good. HMY, you can see on HMY, here's your downtrend. I pointed that one out. The buy area was down basically. I've kind of got this green area marked out as a buy area, but this was the bottom of the buy area at 377. We hit that, we went all the way down to 375, 2 cents below. So pretty much had that one spot on. And then it's rallied, off that buy area. You can see it rallied basically 22% right into major resistance. Now we're coming back down into that support zone. So we should hold, and that's what I'm looking for. I'm looking for this kind of area to hold, and then we're going to break out. All right, that's what I think is going to happen on this. Doesn't mean it will, but that's what I think is going to happen based on what I see in the chart and how the price action's acting. Again, we have bullish divergence here in the PPO and bullish divergence there in the RSI. All right, so that's my indication that tells me we're going to hold support and move higher. Okay, all these stocks, if I just kind of roll through these red ones, these are like your high-flying, speculative, retail COVID stocks, basically. A lot of these, not all of them, but they're the ones that everybody was just like buying just because they're going up. And, when that momentum breaks, these things can go down quite a bit. So here's Digital Turbine. Again, we broke, there's your sell signal, break a trend, back test, and, rejection. So this candle is telling you that this was resistance. It held and it's getting rejected. So I wouldn't expect this to just rally up and just recover and just continue on a bull run. I would be looking for this because of that to break and head down to 43. All right. So that's going to continue to be my target on that one until the chart changes. AMD, semiconductor. Often semiconductors lead. They're a leading indicator of tech crashing or market selling off. And you've got basically an uptrend line there. You've got negative divergence all right there. You've got a break in trend, back test, selling, continued selling. So look for a takeout of the lows right here. This is key level. It's about $73.90, $74. You want to watch for a break of that. If you get an impulsive break through that, whether it comes in the form of a gap down, if you get a gap, you're probably going to get a gap, what they call like a gap and crap, where it basically gaps and sells off. But if you get a gap down, then look for that to run right down to 58. No, it's about 59. All right. It's a thin zone right here. See that? There's no trading in this area. Just big gaps and just a big run right through that zone. You get back into there. There's no traders. There's no traders that have positions at those price points. And so it should just collapse right down there to 59. So I'm going to continue to trade that. I like that. That looks good to me. Riot, yeah, I've got levels marked out. Again, we got rejected here at resistance at 65, likely heading down to the bottom of the range. I don't like that how this one trades. It's kind of crazy. You'll take, if you don't get a perfect position, it could move against you 15% in a day, and it still looks good in the chart. If you're going to trade it, I would suggest taking a smaller position size because it's pretty wild. But obviously, there's some big profits if it's going to go further. The trade desk. All right, we just came right down to support right there, closing on support. Maybe we'll get a little muted bounce, but I don't expect the bounce to be as substantial as this last bounce. It's probably going to be muted, if a bounce at all. I'm not in this one right now. Let's see what else it looks interesting here. Tesla, this is kind of interesting. Here's a trend line right there, you can see. And we broke it, but recovered it. That was your bear trap. All these had a little kind of bear trap, short-term move. And then we broke again, so we're closing back below resistance. That's a pretty impulsive close too, so Tesla might sell off pretty good tomorrow. Look at NEO. Still short this one. I've been short this one the entire, for quite a while. I've been short it. I was shorting it up here, I believe. We broke trend. So there's your trend on the daily chart. Broke trend. And, your first leg down, you get a bounce and continue to the downtrend. All right. I don't see any signs that downtrend is finished. There's no bullish divergence. There's no indication that the trend is going to reverse. So the trend is your friend and it's down. That's what I see in this one. 200-day, we'll probably get a small, that's probably where we're going to get a bounce, is there at that 200-day. NEO, I think, is heading down here to $22. You got a gap right down here. And this is also a thin zone. See how we just shot straight through there? We've now entered that zone again. The top of the zone is about at about $40, and we've now entered it again. So I think it's very likely we're going to get a swift move down to $22. We might stop briefly at the 200-day, but I think we're heading down to that $22 range. And of course, always possible to come fill these gaps all the way down here as well, down at like $8. Let's see what has happened. ZG, head and shoulders. All right, we're right there at the neckline. We closed at the neckline. Watch for a break of that. Break of that, this thing's likely heading down to 89.92. And the neckline's right there at 133.19. Qualcomm looks like it's continuing to downtrend. Again, I shorted Qualcomm right there. See the circle? That's where I got short Qualcomm. And yeah, that's continuing to drop. Looks like it's good. I'm not short Qualcomm right now, though. I covered my short right there at this gap fill. And I've kind of moved into some other trades that I think haven't quite sold off yet that are going to have a catch-up sell-off. Like IWM is one of them. So, but again, Qualcomm has a gap all the way down here. See the gap down there at 93.93? I think it's likely we're going to break that. Look, if we break the 200, I think it's very likely we're going to come and fill that at 93.72. That's probably the end of the drop in Qualcomm. Just running through these. Carvana, you can see we're breaking down out of this bullish rising wedge pattern, big negative divergence. It's got everything in the making to go lower. Carvana has a longer term trend right back here. You can see we just held that trend. X out the COVID drop because that's just enforced selling and stuff. But I think Carvana is heading down to that trend line. That's about 161. Likely going to, see this gap right here. I think we're going to come in and hit that and fill that gap, but maybe at the same time. So I think we're going to do that. It's going to put that out in May. Maybe we got a week or two as it drops down. I think that's probable. DraftKings is relatively strong, kind of hanging in there and up there. So I'm not touching that one right now. But if you look at DraftKings, it's just got negative divergence. See this? It's just continued negative divergence. This price action up here is divergent high price action, which tells me it's likely going to fail. So I'd watch for a break of 65.25. again, there's your bear trap where they broke it and recovered it. But I think if you break again, you're probably going to head down to this trend line down at 46. All right, that's what I'm watching for on that one. Yeah, Peloton, weak today, below the 200-day moving average. That's a pretty good close, but that's the weakest close below the 200-day moving average. To me, that looks like we just broke the 200-day moving average. After hours, you can see it's down another %. So I think we're probably going to move lower in Peloton. Next level of support looks to be around 80 bucks. Etsy, impulsive breakdown today, still holding support. Support's about 197.24. Looking for a break of that. You can see that was former resistance, then it was support all through there. A break of that, and down we go, likely down to the 200-day moving average. Again, all of these look weak. All right, nothing in here really looks relatively strong. Redfin's coming into some support here at 61 area. Negative divergence. Nothing's changed. All right, the momentum is still down. Price is down. We had a bounce, but just because you had a bounce, I mean, yeah, if you go back in time on any stock chart, you go back 20, 30 years, you're always going to see an uptrend. But that doesn't mean this thing can't get halved in the process. And it also doesn't mean that it's not going to drop and just not come back for 10 years. You know, we might not see these highs for 10 years. Who knows? You know? So again, when you have something trending down, you just take it for what it's worth. Oh, Snap. All right, so there's Snap trade, and you can see, so I shorted this one just the other day, and basically you can see this nice clean uptrend right there. And I think I was talking about this, how it recovered, but it looked weak to me. It looked like a weak recovery, and sure enough, it's breaking down. So here's your support. It's about 48, a break of that. I think we break 48, we run straight down to gap fill at 29. Probably stop at the 200, but I think we're going to gap fill. And I still like that. Nothing's changed. Good selling today. TAN, I'm still short TAN. Again, you have nice clean uptrend off the March 2020 lows. All right, you put in negative divergence. See right there. Started dropping off, so that's your divergent high, and it was also a bearish rising wedge. Break trend and trend down ever since. Lower highs, lower lows, all right? So now we're just going to make the next lower low is what this most likely looks like. Probably going to head down to, I found this level today. Looks like we got a little bit of support right here, about 68. So I think we probably run down, undercut the 200 at 68, and then maybe bounce and close right at the 200. Something to look for on that one. Okay, that's all I got, guys. If you haven't taken the course, take the course. Link is in the description below. Charging $100, and I'm not going to lower the price. It's a fair value, and I think that, you know, I priced it so it's affordable. So take a look at that. Leave me a thumbs up. Catch you guys tomorrow. Bye.